When you hear the name Adobe, your mind probably jumps straight to opening a PDF file or maybe editing a photo in Photoshop. And you wouldn't be wrong. But the company, which trades under the ticker symbol ADBE, is so much more than that. It's a massive software giant that has become absolutely essential for creatives, businesses, and even regular people all over the world. Think about it. Graphic designers creating logos, marketing teams building entire advertising campaigns, Hollywood studios editing the next big blockbuster movie, there's a very high chance they are using Adobe software to get the job done. So, why do people get excited about investing in a company like Adobe? So, how does Adobe turn all this market dominance into actual cold, hard cash? The answer lies in its brilliant business model, which is primarily based on subscriptions. Gone are the days when you would buy a physical box of Photoshop. Today, the vast majority of Adobe's revenue comes from recurring subscription fees. This provides predictable and stable income, recurring revenue. That predictability is something Wall Street loves. Instead of one-time sales, Adobe gets smaller amounts from millions each month. The company breaks revenue into two main segments. First, digital media, Photoshop, Illustrator, Premiere Pro, After Effects. It also includes Document Cloud, Acrobat, and PDFs. People and companies pay monthly or annually to access this suite. It's sticky. Files and workflows keep customers inside the ecosystem. The second segment, digital experience, powers analytics, e-commerce, and enterprise marketing. Alright, let's get into the numbers and talk about Adobe's recent performance. Every 3 months, public companies release an earnings report. This is basically a report card that tells investors how the business did. The company reported total revenue of $5.31 billion, which was a solid 10% increase compared to the same time last year. This revenue number beat analyst expectations. When companies beat expectations, the stock price often goes up. A big driver was the digital media segment, the Creative Cloud. Digital media brought in $3.91 billion, growing 11% year over year. Even with talk of new AI competitors, people are still paying monthly subscriptions for Photoshop and Premiere Pro. Now, profit, net income, earnings per share. Adobe reported adjusted EPS of $4.48. That sailed past analyst predictions. The report confirmed the core business is healthy, the growth strategy is working, and new AI features like Firefly are starting to attract more customers and drive revenue. Now for a question I get asked all the time about big tech companies, does Adobe pay a dividend? A dividend is a payment a company makes to its shareholders, almost like a thank you for being an investor. The simple answer? No. Adobe does not currently pay a dividend, and honestly, it never has. This might seem like a downside for income-focused investors. The reason? Management chooses to reinvest profits back into the business to fuel growth. They fund R&D to create new products, run large marketing campaigns, and acquire promising companies, a common strategy for growth-focused tech giants. So, Adobe emphasizes capital appreciation over dividend income. Align that with your goals. When you're thinking about investing for the long term, 5, 10, or even 20 years, you want companies built to last. For me, Adobe checks a lot of the right boxes. Once a pro or company starts using Adobe, it is difficult and costly to switch. Projects, files, employee skills all create strong customer retention. This creates a loyal customer base and predictable recurring revenue. Adobe spends billions on R&D to improve products and create new ones. It shifted from desktop to cloud and now positions itself to lead in AI. The explosion of digital content, businesses, creators, individuals, photos, videos, websites, and social posts creates massive tailwinds for Adobe. Financially, Adobe is highly profitable with a healthy balance sheet. A lot of cash on hand and manageable debt gives strategic options. For long-term investors, that financial fortitude provides safety and peace of mind. The company is well managed and built on a rock-solid financial foundation. Looking ahead, the future of Adobe appears closely tied to artificial intelligence. The company is making a huge bet on generative AI called Adobe Firefly. With Firefly, a user can type a simple text prompt example, a golden retriever wearing sunglasses on a beach. The AI can generate a high-quality image in seconds. This supercharges creative workflows and makes pro-level content accessible. Strategically, it adds value to Creative Cloud and defends against AI-native startups. Adobe highlights ethical training, using its own stock library and licensed content. Beyond AI, Adobe is expanding into 3D, gaming, VR, and AR with Substance 3D and immersive tools. Risks exist. Competition and macro slowdowns could pressure subscriptions. But opportunities, AI, 3D, a massive loyal user base, look larger. Do your own research, but the path forward looks bright.